Leading luminaries from the private, public and industry sectors were present to discuss the road ahead opportunities in the real estate sector. The panel pondered on a positive growth outlook for the sector, even as it languishes in the doldrums today. The panel finally concluded that with the passage of the Real Estate Regulatory Bill, consolidation and innovation are going to be the hallmarks of resilient real estate companies.
Mr. Shaktinath, I know everybody does developer bashing all the time. And I really feel that in spite of all the issues, the real estate market has really evolved, especially over the last 10 years. So what are the positives you feel which has happened in the market? So I'm not talking about the sales and etc. I'm talking about just the way the market operates from your side, the quality of assets, the investment coming in, institutional money coming in. So what are the positives you have seen over the years? You've been in development for a long time.
See, there was a time in 2007-8 when the money was just flowing in, and all the investors, all our good friends are here, they would invest in just any land bank without understanding the overall infrastructure development in that area. Developers were really very happy because the money was coming in. Everybody was disorganized, Let's not blame the industry or anybody. It was just money coming in, and everyone took the money. Because of that, the exits got delayed because those projects never seen the real maturity. So I think along with the developers, even the investors are to be blamed for investing the money without going into the real core of the development of the infrastructure. So over this period of time, things have really taken a positive shape. The developers are a little organized now. They have seen a lot of pain in a couple of years. Investors have seen the pain because their money is stuck. So a lot of exits. The exits are happening. I'm not saying in terms of dollar terms, but definitely in terms of INR, the investors are making money. Developers cannot help in terms of your exits when it comes to fluctuation in terms of the rupee or devaluation of the rupee. But I think from now onwards, what we are realizing is both developers as well as the investors are organized. Good times are there. I think let's consolidate together and look for the positive side of the field,
Vikas, if you can talk about REIT also, what do you agree or what? Because, government announced it, it was discussed, everybody. So do you think it's actually going to come up also? Because already it's been a year that it has been announced and nothing is happening.
I think the key is people are waiting for some tax clarity. We hope that in this budget there should be some more clarity on it. I can be able to enumerate it better. We believe that if that tax clarity does come in on capital gains and also somewhat on DDT, I don't know whether DDT exemption will be given or not. My belief is that they will not give any exemption for asset owners through REIT for any dividend distribution tax. But mine is that also, if at least on the capital gains, there's a clarity of 3 years becoming 1 year and the sponsors not being taxed when they sell. Currently, they will be taxed when they sell if for cash post listing of the REIT. At least if this is done, I think there will be some companies which will go for REIT. And we as a house believe that it is not the FPIs may drive it initially, but we believe that significant amount of retail savings is actually going to come into REITs. A lot of people go ahead and want to invest in real estate, but the ticket sizes are pretty large, right? If you have to buy real estate for income yield, you want to buy a residential, the income yield is only 2%. But if somebody wants to buy a commercial property, the ticket size is very large, and you have hassles to manage it from a leasing perspective, then removal of the tenant, the property tax, maintenance, etc. And if one were to buy a commercial property, retail is anywhere between 8 to 9% kind of a yield people are willing to buy. But REITs will potentially throw up a lot of opportunity for retail players to go ahead and deploy capital, and we believe that REIT market is going to be driven by more retail or HNI market in India.
Okay, do you have a view because it's a big tax issue? Or do you have a view on REIT or yes? I don't know if you was asking a question, but I'm not sure because you're not from the real estate.
No, I was nodding my head like this. I think this tax is a big impediment. Unless this tax is sorted out, and especially dividend distribution tax, the calculation will bring down the yield to 7%. So unless that impediment is taken care of, I know a couple of large houses are going ahead with the REIT.
Gaurav, where do you see the market next 3 to 5 years, Indian economy is going to add $1 trillion to it in next 5 years, which is a big number. I believe is around we are about $2.2 trillion economy, and we were just a trillion some years back, and we're going to add another trillion. So I'm sure that would have some impact or a major impact on real estate. So where do you see the real estate market next 3 to 5 years?
See, I think, clearly even today, there is a lot of pent-up demand. I don't necessarily agree that, it's only the economy that's going to boost up the demand for real estate. If you ask me, I mean, definitely not a macro factor, but clearly from a real estate perspective, execution is key. The main reason for the sales velocity levels being what they are today is because, customers just don't want to buy anything that's under construction, even if it's 95% complete. And, where I see, real estate 5 years from now, I mean, the trend that I possibly see is that clearly the number of developers will be lesser. There will be a consolidation. I mean, this phase will probably differentiate the men from the boys, the guys who deliver, and we are already seeing that. In a market like NCR, a developer who's probably delivered 2 projects is not stretched, has delivered a good quality. Those are the guys that institutional funds want to back. Again, you are seeing a trend where even the bigger names in a market like NCR are today partnering with a Godrej or Tata just because, so that their product can sell. So what I'm seeing is probably 5 years down the line, maybe real residential will also be sold like office, where you start sales only after the building is complete, or 90% complete.
Thanks, Vikas. Briefly, what are the 2-3 top things you feel are going to happen next 3 to
I think
next
I
5
agree
years?
with Gaurav. Consolidation is going to happen in this space in a big way. Margins are going to shrink. The ability of funds to target those 20% plus IRRs on an equity basis, I don't know how much it would be feasible. Third, we believe is that residential market, we still will see more pain going forward. Commercial will be good for next 2-3 years, but we believe again supply will increase significantly over next 5 years because of the new builds which are happening. So these are the broad trends which we believe.
Yeah, thanks, Ashish. Your view?
Yeah, I think so. On another thing that I think is prominent is, while the land controls have been abolished by the central government and the state governments, I think land supply very largely is still indirectly controlled by the government, because the local governments decide which roads to build, where to connect, which locations to connect with roads. They decide how to connect new locations with public transportation. So they indirectly, and they decide what land to include in the zone master plan and so on and so forth. So I think, so my personal opinion is that for affordable housing or anything of that nature, the policy will help, but what will help even more is create more and more land supply for people to do development on the peripheries of the cities. As we know, none of our cities were designed for the kind of growth that we have seen everywhere. So what needs to be done is newer and newer areas on fringes need to be connected through roads, public transportation networks, and land zoned properly so that developers can develop them in large chunks.
Vishal, where do you see the market in the next 5 years?
I wish I knew the answer to that properly. But I think one thing that I think can be a big factor in changing the dynamics of the industry is the real estate regulatory bill. If that bill is passed by both houses of parliament in the shape and form that it is currently, I think the industry as we know it will come to an end. And you'll have a completely new set of norms and players 5 years from now. If they don't pass it, then my suspicion is that we'll be pretty much where we are with a few, incremental changes.
Good. Alok, from your point of
Yeah,
view,
so-
more of the size, scale of the market, what do you see?
So my sense is real estate market will continue to grow at the same pace at which economy will grow. But I think what shift will happen is the players who are doing well and small players will stop coming in the market. Actually, everybody thought they can jump in, make good money, and kind of continue. But real estate market has no entry barriers, but it has serious exit barriers. And it's a very tough business. So the players who have corporate governance, who are good in delivery, who are focusing on customers, they will do well. They will capture a disproportionate share of market. So I will not name a developer, but in NCR, there's one developer who has come from Bombay. They capture 11% of the market. Other one is 7%. So I think between 20% of the, maybe between 5 to 7% of the developer, 70% of the market would be captured across residential and commercial. So developers who are doing good and focus on delivery will capture a disproportionate share. That's what I feel.
Balaji, any trend? Are you also, one thing I would like to ask, that seeing more people investing in as an investment and not as an end user into real estate? Besides, of course, where do you think where the next 5 years is going to happen?
Yes, of course. I mean, investments do continue in real estate, and as I see it across, family office and HNI portfolios, the allocation has been, constantly increasing. So, HNIs do love real estate, so whether directly or indirectly. So that will continue to increase, and a lot of money will flow into this segment. But other than that, on an overall view, I think over the last, about maybe 10 to 15 years, we've been seeing the market mature. We've been seeing a lot of positive changes. I'm always an optimist as far as this sector is concerned. I continue to believe that the things will be better than what they are today over the next 5 years. I mean, we'll see larger developments. We'll see probably, more maturity and much better governance. We'll see probably easier policies, because I think the roadmap is already laid for that. In fact, some of the state governments have already started doing that. If you see, Maharashtra, for example, has cut down the approvals from, almost by about 50%. So, things will only improve as we go along, and more capital will flow into this segment as we go along.
Great. Mr. Shaktinath, from your point of view, at least there's some positive points Balaji has mentioned, and I agree with them. From your point of view, where do you see the market in 5 years' time?
Well, I think investors are more intelligent than the developers, and we see quite a lot of investment still going into the real estate. So I personally feel the growth of real estate is inevitable, There's nothing coming in from the government side, whether it is housing, offices, or IT parks, or whatever it is, or hospitality, or what. So everything has to come from private sector. Growth is inevitable. It is just cyclical. I think we need to consolidate, plan better. I think get together, have faith in the system. Let's not fool around, And I think I'm 100% sure, and you being having such a large IPC, there is no doubt about the growth. Money is there. That's why we all are sitting in this room. People have money, and they're still deploying the money into the project. So there is no discussion about the growth of real estate. It has to happen. It is just a matter of where, when, and how. Better planning, better developers, organized, and in phases, I think.
Great. Akhil, from just an outside view, where do you see, the economy, the real estate infrastructure going next 5 years? What is your picture you have in your mind?
So, Anshuman, the outside view is that real estate will grow, will continue to grow, is actually inevitable. The way country is growing in various sectors, not having real estate grow is not an option. The question is, are you doing it by design, by putting those right things, whether it's land regulation, whether it's governance around it, whether it's availability of capital, or it will happen by default by market forces. But it is inevitable.
Yeah, I just want to put in a bit of my view, although I'm in a position where I don't have to give my view, but luckily for a change. But I feel, there are a lot of positives. 2015 saw the highest office space absorption, about 38 million square feet of space, in fact close to 40 million square feet of office space in the country. If you compare that to any of the other countries, when I was comparing with Asia Pac, it's the highest. There is expansion happening in every sector. There is funding which has improved. I feel that we as a country are at the bottom. So hopefully we can only go up. I keep on saying that we can only go up. We are in a very unique and a lucky position that whilst most of the world is talking about a slowdown, there are issues, here, because we have a low base, we are only going to grow. So I feel next 5 years they're going to be very exciting. There's some positive things happening from the government side. We don't talk about ease of doing business. It's just not a slogan. I've seen that government actually appointed KPMG to do a paper where what are the steps required to make it easier for the businesses to operate. And this is going to be spread to the states, because as you know, we are a federal country, we cannot do anything. Whatever the center announces, if the state does not adopt, especially for real estate and for many other things, we can't move. And the government is encouraging a more fierce competition among the states to attract investment. I think that's a big positive. So I would like to thank all the panelists. So thanks very much, and thanks for your patience, the audience. Thank you.
Welcome to the Global Business Summit, Mr. Nath. It's a pleasure to have you here with us today.
My pleasure.
To start off, what's the biggest challenge facing the real estate sector today, given that we are also in a downturn of sorts?
So real estate has gone through a little difficult time. Last couple of years, especially, we have seen a very strong investment and demand cycle in 2008, 2007, 2008. But now I think things are looking up, and the challenges are almost over. Now it is the time for the growth.
The government has been making a lot of policy announcements across sectors, a lot of reforms coming up. As far as the real estate sector is concerned, how do you evaluate the government, and what are your expectations and demands for that matter?
See, recently we have seen a lot of relaxation in FDI rules in real estate, which is very, very positive. So in fact, the constructed and ready real estate malls, offices, even there the real estate can come, the FDI investment can come in. So that is a very positive step. So I think the government is moving in the right direction in promoting real estate as a core sector, because a lot of growth of the economy is dependent on the real estate right now.
And the Logix Group started out with IT parks back in the 90s, and you've moved on to housing, you've moved on to affordable housing as well. So what's the ratio of, what's the percentage that you devote to housing, to commercial? How do you divide your business?
See, yes, true. We started with offices, IT parks, and the commercial real estate. Then we diversified to resi, and then to mixed use and mall too. I would say we are trying to keep a balance between all the portfolios, whether it is residential, commercial, or office space construction, because it is just a business strategy. We realize that yes, there are ups and downs in different segments. Within the real estate, there are challenges. There are different segments which sometimes get slowed down. So almost we are trying to keep a balance between residential and commercial to a tune of about 50-50.
Real estate is, this sector is perhaps the only sector where customer trust is really at its lowest. Most developers are still not able to meet deadlines. You're not able to deliver on time to the consumer. So what is it that needs to change, and when can we really see a positive change in the real estate sector?
See, let me tell you, I don't want to speak on behalf of my developer fraternity, but definitely no developer will do it intentionally. There were challenges, things went wrong. There were over-commitments, over-planning, wrong planning, and shortage of funds. That is the main reason why consumers are not getting their apartments on time. But definitely now the things have streamlined. People are taking the positive steps, and a lot of deliveries are happening. So I see, yes, definitely it's a bad time for both customers and for developers, because there are delays, long delays, and people have put in their hard-earned money. It's a very sorry state of affairs, and everybody feels bad about it. I'm sure no developer feels happy about delaying the apartment, because for him also his investment cycle gets disturbed if you don't deliver on time. Yes, I think, but now onwards, I think people are realizing their mistake and they are trying to correct the further course.
So is there a policy push that is required, or is there more, you need to pump in more funds, or what is it that?
Yes, definitely the more funds the industry requires a lot of funds today, and cost of capital has to be right. Right now, what the cost of capital to real estate industry is very, very high in comparison to the rest of the developing or developed nations. It is very high, I will say. That is why you see that is a major bottleneck. And policy push, yes, government is coming up with a real estate regulator bill, but definitely the bill as it is quite it can damage the industry too. I think we need to balance out the bill, keeping the interest of the consumer as well as the developer in mind. I think that bill will clear out a lot of difficulties that a consumer faces.
And budget 2016 is just around the corner. What are your expectations from the budget?
Well, I think everybody is hoping that some rate cuts maybe, and definitely some easy policies. I think rate cut right now at this stage, because the inflation has gone down and the oil is at the lowest. I think this is the right time. My request to the finance minister is to go in for a steep rate cut, wherein I think he can suggest to RBI to go in for a rate cut and maybe look for a policy boost.
Right. And as far as affordable housing is concerned, developers have been demanding an extended tax holiday in that particular segment. How is it fair, and how is it going to impact the home buyer?
You see, what the Prime Minister's dream is about to build a lot of houses in the next couple of years. That is only possible when the industry is given the right support. See, land acquisition by the developers is a major challenge. When you are talking of about affordable housing, where is the land for that? So the government need to consolidate land, or maybe if the government wants developers to acquire land for that, you need to ease out the policies. You need to arrange easy finance for those housing to come up. It's a huge investment. When you're talking of affordable housing, it's a huge investment which goes into those developing those complexes. So I think yes, some kind of a tax break, or maybe easing of, I would say rather than tax break, if the money is available at a right cost. Today the biggest challenge is the funds are available in India, and let me tell you, with our current the new Prime Minister's new policies, a lot of money is coming into India, but still the cost of capital is a little higher than what it should be.
All right. Thank you so much for joining us today. And what are your thoughts on the Global Business Summit?
I think it is a wonderful platform, and I really congratulate you for doing such a wonderful thing. It is really very nice.
Thank you, and thanks for being a partner with us.
Thank you.